Good morning and welcome back. I'm Grant Mercer and this is Storm Stock Solutions. We're here to bring some clarity through the chaos before the opening bell. The tone heading into today's trade is all about AI and all-time highs. According to reporting from MarketWatch, investors have piled into big tech on the belief that massive AI spending would eventually turn into massive profits. Now, with the Magnificent Seven rolling through earnings, that bet is about to get a hard reality check. At the same time, the S&P 500 just punched through 7,000 for the first time ever, and gold is setting records alongside it. That's a rare mix of euphoria and caution in the same market. Let's start with today's key drivers. First, the AI payoff question. Jurika Dujmovic at MarketWatch highlights that one number may matter more than anything else in these big tech reports: whether AI and cloud investments are actually widening margins, not just lifting revenue. Traders will be drilling into CapEx, data center spend, and any color on AI monetization. If companies say, "We're still spending heavily, trust us, the payoff is coming," without the numbers to back it up, these richly valued names could get punished. If instead we see clear evidence of AI-driven leverage, more profit per dollar of spend, that keeps the AI narrative intact and supports these elevated index levels. Second, there's a fresh catalyst within the AI ecosystem itself. Brittany Nguyen at MarketWatch reports that Micron and other chip names are getting a big boost after comments from Seagate, which said prices for its storage products could go higher as supply stays tight thanks to AI demand. That underscores that AI isn't just about GPUs and the big platform names. Memory, storage, and the broader semiconductor supply chain are still very much in play. Traders are likely to watch that group closely off the open to see whether this is a one-day pop or the start of another leg higher for AI infrastructure plays. Overnight and into this morning, the broader market story is that the S&P 500 has now cleared 7,000, a major psychological barrier, with leadership coming from a surprising group of stocks, as Isabel Wong notes. That suggests that while megacaps still matter, we're seeing some rotation into new momentum names. Something Michael Brush has been flagging in his coverage of stocks that are becoming the market's new leaders as big tech shows signs of fatigue. The pre-market question is whether that broadening out continues, or whether everything trades as one giant macro AI bet once the big earnings hit. On the strength side, one of the most unusual features of this tape is still that lockstep rally in gold and equities. Joy Wiltermuth at MarketWatch points out that gold and the S&P 500 hitting records together is historically rare. It tells you investors are trying to have it both ways, riding the equity wave while quietly buying insurance. For traders, that can be a sign of underlying resilience. People are not fully bailing out, but also a signal that hedging demand is high under the surface. Areas showing strength today are likely to include that gold complex and the broader AI-linked chip space, as headlines around tight supply and record-high haven demand keep drawing capital. Now, let's talk about risks and fragile spots. The US dollar is one of them. Barbara Kohlmeyer highlights a hedge fund veteran, a former commodities chief at Bridgewater, who argues the current dollar freakout is overdone, even as he advocates owning both dollar and gold. For markets, the important takeaway is that the currency backdrop is in flux. A weaker dollar can be a tailwind for US multinationals and commodities, but it can also stir volatility in global funding markets, emerging economies, and risk assets that have leaned on dollar stability. That's an area traders may want to handle with care as they position around both AI and macro themes. There's also a macro stress headline coming out of Europe. Steve Goldstein reports that Germany's federal criminal police raided Deutsche Bank offices on alleged money laundering ties to Russian magnate Roman Abramovich. Right now, this looks like a legal and reputational issue rather than a systemic shock. But whenever you see a major European bank in the crosshairs of law enforcement, investors pay attention. US traders will be watching for any widening in European bank credit spreads or weakness across the global financials complex as a barometer of contagion risk. So far, it's noise, not crisis, but it's the kind of noise that can move sentiment quickly if it escalates. Let's shift to sleepers. The under-the-radar setups I'm watching today, not as recommendations, but as potential stories that could matter more if the right conditions line up. First, those Micron and chip sector comments from Seagate. If the market starts to believe that AI-driven demand will keep storage and memory pricing higher for longer, that can reshape expectations across a whole swath of the semiconductor stack. Watch whether the initial boost in names like Micron holds into midday, or if early enthusiasm gets faded. Second, Starbucks. According to Tommy Kilgore's reporting, the company delivered another quarter of much better than expected growth in stores open at least 13 months, pushing the stock toward a 10-month high. That's a quiet but important read on the consumer. People are still paying up for coffee and small luxuries. If Starbucks continues to grind higher, it reinforces the narrative that discretionary spending hasn't cracked. Something broader retailers, restaurants, and travel names will be judged against as earnings season rolls on. Third, personal finance and retirement themes. Beth Pinsker's column on the tax strings attached to inherited IRAs isn't a trading catalyst, but it does speak to a backdrop where individuals are wrestling with complex tax rules and estate planning. Over time, that can influence flows into certain asset managers, financial planning firms, and even the products they offer. And finally, that S&P 500 at 7,000 milestone. Traders will be watching whether this big round number acts as a magnet or a ceiling. Do we see a convincing break and hold above 7,000 as earnings roll in? Or do we get sharp intraday reversals as profit takers emerge? So as we head into the open, keep your focus on three intersecting stories. Big tech's AI earnings and whether the numbers justify the hype, the AI supply chain beneficiaries like Micron and Seagate that are suddenly back in the spotlight, and the strange twin peaks of gold in the S&P 500 as investors try to balance greed and caution in the same portfolio. I'll be back with intraday updates once the market is in full swing to help you separate what really matters from the noise. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions, I'm Grant Mercer. Stay sharp,